Hi guys, hello everyone. So today is 2nd May 2019, and today we shall. So in this video, actually, the aim is to, as I've been discussing for the past in the past few videos on daily trading videos in the daily trading video series. You can check it out in that daily trading video series if you haven't before. Basically, we'll look at the basics, some of the basics that we need. But the basics that we look at here will not be so the basics that we look at here will not be a general kind of basics where the theory, it will not be a more theoretical approach. So the main aim of this videos is to be as practical as possible. So I would say this is an applied trading basics course, or you can say applied trading basics videos. So the thing that I am going to teach here is going to be mostly we'll learn whatever is needed to apply in the real world for trading. So that's the idea here. And for that, of course, we need a little bit of theory, but it will not be, so I'll not go deep into things, and I'll keep it as simple as possible to understand. Okay, and at the same time, still not compromising on the quality of the output. So like it will not be like just going through the things. You will have enough depth to be able to trade efficiently. Okay, so let us start now. Let's not waste any more time. So actually, if we look at it, okay, first of all, how does what is this? So basically, we'll be focusing our interest on Indian markets. So in Indian markets, what do we have? We have something called Nifty. So if you see Nifty, so it is also called Nifty 50. Okay. So why is it called Nifty 50? Because it contains 50 stocks. So this is the first thing that you need to know. Okay, you have something called Nifty, and basically what does Nifty tell you is how the Indian economy is performing. Okay, that is, if the Indian economy is going good and the earnings are good, the Nifty should be higher, and if it is not, it should be the other way. Okay, that's a simple way to understand. And you similarly have Bank Nifty. This is a part of this is a sub thing. So there are several sectors in the economy like banks, telecom, technology, metals, cement, manufacturing. All these are different kinds of sectors, pharma, everything. Okay, so so when you say sector, that means it's just a part of the economy which deals with certain kind of things, just a division, you can say simply. Okay, so what is the significance of Nifty? So this is the most important index that needs to be understood first of all before going to anything. So Nifty is simply, so it contains 50 stocks from different sectors which should give an idea as to how the economy is performing, which means if suppose the Nifty, these 50 stocks, if this Nifty is not doing well, then you can clearly say that except for some of their stocks, the overall economy is not going to perform well. That means that that's why if you see when Nifty is going down or Nifty is going up, okay, almost so when Nifty falls, almost most of the other stocks, there are around 3,500 stocks. It can be more, I'm just saying a number. So there are so many stocks. So most of them will be going in the Nifty's direction. Of course, there are exceptions always, right? Which that is the case because that gives you a picture. So to understand the country as a whole, the economy in a quick way, that is the best thing to do. Okay, this is the first thing. Then the next thing is, so how do this actually go listing and then all this stuff? So basically what happens is any stock to be able to be available for trading in the public domain, in the NSE or in the BSE, that is National Stock Exchange or Bombay Stock Exchange. There are two things, and you can assume to be more or less same. There is slight difference, that is that not every stock trades in the National Stock Exchange, but every stock does, which is listed, does trade in the Bombay Stock Exchange. This is the thing that you need to know. In BS, that is BSE and NSE, I'll just use the shortcuts from here. So in BSE, you will have all the stocks trading, even those which are trading in NSE. But in NSE, there is a limit. Okay, not every stock trades. That's. But more or less all the big stocks, all the large caps, Nifty. I'll see you what is large cap and stuff later. So Nifty, all the Nifty Bank and all these stocks definitely trade in the NSE. Okay. So first, then coming to the point. So basically, in order to get listed and get traded, the stocks need to first file an IPO. What is IPO? Initial public offering. So what happens in IPO is they want to raise money from the public. What is meaning of raising money? That means they are asking money from the public to, in order, so that, and they promise that, it's not a promise, it's not a guarantee, but the idea is that they'll use that money to grow their operations and produce profits in a better way. And because they do not have the sufficient capital to enhance their business in a quick and efficient manner, that's why they have to raise the money. So this is what actually happens. So they initially raise the IPO, that's called initial public offering, and then what happens is you will have people subscribing for it, and depending on the demand, the price will get stabilized on the day of. So on one day it will finally get listed. So basically, first you need to bid. There will be several bids. There will be a 3-day window where you can where all the people can opt for the IPO. So basically they can bid for it. So you'll pay certain money and then you will say, I want this at this price. So then after that, the results will be announced, and accordingly it will get listed on the exchange. So this is the process. So basically, why these companies need money? So one way of companies getting money is through bank. They can get a loan from the bank, but there's only a certain amount of money that they can get from the bank. Right. So that may not be enough to have a sustained growth. So that is when they go for for raising money through the equity market. So this is called equity market, and so this is a very, very important source of getting that money. So this is how it works. It gets listed, and then of course, people then, as the business grows, depending on how they perform throughout this period, the stock performance accordingly works out. Okay, so then coming to the Nifty. So this is about the investment basis, right? So what does happen in trading? Okay, so this is the thing. First we saw what is Nifty, and then we are seeing how does a company actually get listed. Like, how do you see a company here, to be simple, in the simple terms. Okay, and then now we will look at in the trading perspective. So okay, so now we are concerned more with after it getting listed, how does this trading happen? How does this everyday fluctuation happen of the prices? So the prices keep fluctuating, right? So this price is keeps fluctuating because of several factors, like the news on the stock, the news from the world. There are many things which may affect it, right? The earnings, everything. It can be anything. So, but it's happening on a daily tick. The most important thing that is actually happening is there is someone who is buying it and there is someone who is selling it, right? This constant exchange of money keeps happening. So someone wants to buy, someone wants to sell. So the whole concept is demand supply. Okay, demand and supply. This is all the basics on which this whole thing works. So when I say demand supply, if there are more buyers, more people, that means more people willing to buy than people willing to sell, then the price goes higher. This is a simple logic. So you can correlate, let's take an example. This you can correlate with similar to any other, let's say you have, there is a company which is operating in shirts. Just to give an example. So let's say initially the company kept the cost, this is like the let's say IPO price or whatever. Okay, let's say IPO price at 1,000 rupees. Or let's keep it, okay, let's say 6,000 rupees, just went so high and it wanted premium this thing. So it paid the 6,000 rupees. Now, let's say there are there is nobody willing to buy it, right? Then what does automatically happen? The price keeps coming down because there is no demand, right? And then let's say still there are no buyers. I mean, there are some buyers, but they are very low. Consider it as a lot of shirts, and so nobody is willing. So then what happens? Suddenly there is it has come to a certain price. Let's say it has come to maybe 1,000 or 2,000, and then after this there are enough buyers. People are starting to buy. Now what happens is after certain time, that means the price can now more or less either go up or be there around. Now so many people want to buy it, let's say at this price. Now what happens? The price will automatically increase. So it has reached to a certain stage where everybody wants to buy it, and then automatically because of the demand, that day the price of the shirt increases. So this is how. So it's always dynamic. So depending on that time, whatever is the demand and supply, it keeps changing. So this is how the things change there. A similar logic works in stocks also. So the stock price also does the same thing on a daily basis. So based on the demand and supply, it's all whatever the factors that may affect. At the end, it comes down the factors due to which the demand and supply is changing. It can be anything, but finally, if the demand is greater than supply, the price will go up. If the supply is greater than demand, the price will come down. So this is the logic how the prices fluctuate. This is the third point. Then now one more thing we'll look at is, so these are all very useful while applying trade. These are the minimum, these are the things you should know. Next important thing is, now we learned something about Nifty. Now let's dive a little bit deeper into Nifty. So I said Nifty has 50 companies, correct? So when I say Nifty has 50 companies, what are the actually? Okay, let's look at this diagram. This gives you a good idea as to what is Nifty and how does the weightage and thing works. So if you see this, so it is important to understand what is it constituted of. So in Nifty 50 is composed of several sectors. So there is financial services, there is automobile, telecom, shipping, pharma, energy, metal, some media, engineering, consumer goods, IT, cigarettes and cement. So these are all various kinds of sectors are there. And if you see, there is something called, this is the percentage, right? This is the weightage. So what is happening here is, the Nifty is divided into seven. So it has to give an overall view of the economy. Depending on how much of the economy is occupied by which sector, this weightage will be given. So now financial services has been given the highest weightage, and followed by energy, followed by automobile, cigarettes and so on. Okay. So why do you need to know this? Because once you know this weightage, that is important in determining how the Nifty moves. So Nifty, if you see, it is an index. It is at some 11,750 or whatever. How does this price change? Right, but so the important thing is Nifty changes by only either 0.5% or 1%. That's it, at max 2%, max. Right, and there is always a rare day, but this is what generally the daily moves are. But the stocks inside the Nifty need not move by only 1 or 2%. Some stocks move by 5%, some stocks move by only 1%. But still the overall index will be up by only 1%. And some will be down, of course. So that is, so now if you take the financial services, just as, consider this scenario where let's say on one day, all the financial services stocks are up. Okay. That is, and then let's say all the IT stocks are down and remaining are more or less at the same price as of the previous day. Now what happens? Nifty will still be up. Right, Nifty will still be up. Okay. So that's it. So I just missed one point in the demand supply thing. In the demand supply mismatch, the thing that matters is how much amount people are willing to. So let's say there is a stock, just a few minutes, and after this we will come back to this. Let's say there is a stock and there is one buy order, and let's say there are 4 sell orders, but that buy order is of huge quantity. That is, the amount of that buy order is very high, whereas the sell orders amount is very less. Then even though the number of sell orders are more, but because the buy order amount is high, the stock will go down but not go up. I'm sorry. The stock will go up but not go down because the demand is higher. Okay, so it's about the amount that is in demand. Just I wanted to clear that point. Okay, coming back to this Nifty sector weightage. In Nifty, if you see, the so what I was saying you, financial services is up, IT is down. Let's say more or less the same amount and of percentage. Now what is left? All the others are more or less at the same position. Now what will happen? The Nifty will overall go up because the weightage of this is higher. So this is how. But and again, even inside these sectors, there are several stocks, and those stocks again have weightage. Okay, for example, in Nifty, in financial services, HDFC Bank and HDFC have very high weightage, followed by ICICI Bank. So these three itself contribute huge amount to the of weightage in the financial services. There is also this public sector banks, which also are under financial services, but they don't contribute much to the weightage. So even if so that means what? Even if a public sector bank moves up by 10%, it won't affect the Nifty much. Whereas if an ICICI or a HDFC bank moves by even 2%, it is similar to moving a public sector bank by 10%. You have that much effect. Alright. So these are the things you should know. That's how one stock movement can make the Nifty turn from one side to other side, which often happens while you are actually applying it in the real world trading. During these expiries and all, what happens is that one big weightage stock moves, that will affect the whole thing. Okay, so this is important to understand. So you should be very familiar with what is this. And also another important thing is this Nifty constituents keep getting updated. Okay, how it all gets updated, that is beyond the scope, and that we don't require while applying the trading. So that's not needed right now. But it keeps changing, you should know that. So this is this is the fourth important thing that you need to know about the Nifty composition. I'll share the link of this blog with you, so you can go through this. It is a very interesting one, and this weightage is an important thing to know. So like that, what happens actually is in Nifty, right? Generally, and one more important thing you need to know, this is also very important. How are each sector related to each other? When I say related, it's called correlation. What simply put, what does it say? When one on a day, when one sector is up, what does the other sector do? If you want to know what is the relationship, let's say between IT and financial services, if at all there is a relationship, what is it? Of course, it's always in general. Nothing is for complete. So, how do you look at it? Now you have IT. Let's say the IT is up. So generally, what happens is whenever financial services are up, IT will be down, and IT is up, financial services are down. This is how in general it works. Thereby managing the Nifty. Okay, if suppose just imagine if every stock in the Nifty goes up by even 1%, you will easily make the Nifty go up a lot, right? But that doesn't happen. On even the worst day where everything falls, or even the best day on where the Nifty is gung-ho, still there are some stocks which go down and some stocks which go up. So that is important to note. Okay. So these are the things for today. This is the thing. We'll stop it here. So we have learned about what is Nifty and how does demand and supply work. Okay. And apart from that, we have also discussed as to, I think, how the Nifty constituents weightage and this matters. Okay, so this should be pretty much it. So this is how. So these are the things that are important, not just the averages and charts just hitting this. Instead, we should know more about the how the action actually happens, so that this will apply. This you are going to apply this while actually doing the trade. Okay, so this is it for today. Have a great day, guys. Hope you enjoyed this, and this will be in the applied trading basics videos, and this is it for now. Hope you enjoyed it. Please post the comments if you have any doubts on today's topic. You can definitely post a comment. I'll be glad to help you out. Okay, so thanks everyone. If you like this video, please hit the like button, and also if you want to give any suggestions, you are welcome. I would be willing to take it. So all the most important thing is to give the best service possible. Okay.